But the number one question that I ask is like, hey, if something crazy happens and your money has to be tied up for a while, like, is your life going to be ruined?
Yeah.
And if the answer is yes, I don't want your money.
Exactly. Thank you. I call that the desperate lender.
Yeah.
I see that a lot in the single family space. Hey guys, welcome to this Boom Effect podcast. Today I have Shariah, who's a multi-family real estate investor. That's not how she started, but guys, she owns a couple of 100 units, raised $8 million, and she owns an equity fund, I think it's called.
Yes.
But I'm going to let her introduce herself. She's probably going to do it better than me, and then we're going to dive deep, guys. So if you're interested in real estate or how maybe to build a fund, if you don't know how it's done, then we're going to talk about all things multifamily today and building a fund, basically, and then how you can kill it as a Muslim woman in the real estate industry, right?
Hello guys, I'm Shariah. I started in real estate back in 2020, started off wholesaling, loved it. I actually used to wholesale multifamily, so that's what led me to what I'm doing now. But yeah, started wholesaling multifamily in Ohio, realized why are these buyers willing to pay me so much in fees without, because you know, with the single family space, the wholesalers would try to like nickel and dime for like 1,000, 2,000. And then I started wholesaling multifamily, which I kind of stumbled upon, and my fees were like 50K, 60K, 70K, and they're not even blinking. They're not even saying anything.
Multifamily assignment fees is different.
Which I didn't know, because this is like my first couple of months in real estate.
Got it.
So eventually, after I got out of wholesaling, I was like, you know, it's time to start building generational wealth, because wholesaling was great, but all I did was create a high-paying job for myself. So I transitioned into multifamily, moved out to Atlanta here a year ago now, and started my journey in multifamily from Ohio.
From Ohio, okay.
Yes.
Actually, Ohio is the perfect market for multifamily. There's a lot of most investors there. Okay. So now, for an absolute newbie who doesn't even know what wholesaling means, what does that mean? Yeah.
So wholesaling is when you find a potential seller. The sellers you don't know that they're selling. So you're cold calling them. It's cold outreach, and you find a seller that's motivated, that has pain points, and what you essentially do is you get the property under contract. And since you typically won't have the money to buy the property, you'll find an end buyer, and then you'll get a fee for connecting them.
Yeah. So you're basically not the one who's closing on the property, right?
No.
You're not bringing the money. Is the end buyer. Okay.
Exactly.
So guys, that's exactly how I started. So typically is the entryway to real estate, but most people actually only think you can only wholesale single family when you can actually make way bigger assignment fees wholesaling multifamily, like you said. So what inspired you then to jump into, is it just the big fees, like to jump into multifamily and then build? Because one thing, me personally, when I got interested in real estate multifamily at some point, when I looked into it, I was like, okay, I thought this is about the buildings, but it has everything to do with just being a master at raising private capital. Yeah. When it comes to multifamily, the money is actually not in the building itself. Anyway, we're gonna dive into this. So how many years you said you've been in real estate so far?
Since October 2020, so almost 5 years.
Okay. And within the last, I think you just told me earlier offline, within just the last 30 days or 60 days?
Yeah, we added a few hundred units. I'm excited about it.
300 units. Okay, fantastic. Yes. Now you do have a niche, which I do love, because you're Muslim.
Yes.
And you've built this equity fund, and I would like you to explain it to an absolute newbie who doesn't even know what that means. But you are also helping Muslims invest in real estate without necessarily having to deal with, the interest, I guess. That's the idea, right? Can you explain a little bit?
Yeah. So if you're unfamiliar in the Islamic faith, we are not allowed to indulge in interest. So a way around that, which is interesting, because all of this, everything I kind of got into, I didn't really even know I was going to get into. It kind of just like happened. Okay. But what I essentially do is, as the fund owner and fund manager, I will only give equity and profit share to the investors. So they're not getting any interest. So they're getting cash flow from distributions, which is either quarterly or monthly, kind of depending on what we have set up. Okay. And then they also have profit share. So they own the building with you. So it's a syndication model, essentially. So it's a limited partner. Okay. But it allows the Muslim community, especially in the US, because we really don't have anything like that. And real estate is the best form of investment. So it meant a lot to me to find something like that for our community, because I haven't seen it. I'm sure there is something out there, but I haven't seen it.
No, I did some research and I found the biggest Muslim community when it comes to like investing in real estate is more in the UK.
Oh,
Most
okay.
people you find online, they're UK based. So over there, that's big, like doing the equity partnerships, whether that be in the single family or multifamily space. But here in the US, I looked into it myself because I have a lot of Muslims that invest with me as well. And I do the same thing on the single family side when we flip in properties or whatever. They want to do more like equity split. But you just said something about syndication.
Yes.
When you say syndication, what does that mean?
So all syndication means is it's a way for you to get into multifamily space and buy bigger units. This is why I target 100 plus units because it just makes more sense because what you do is there's two people, right? There's the GP, which are the operators, the business owners, and then there's the limited partners, which are the investors.
Okay.
So you're able to get into multifamily, leveraging other people's money, also giving them value by giving them equity in the deal as well, but they're completely passive. They're not doing anything. So that's what syndication basically is.
So you all handle managing it, dealing with all the headaches that comes with that.
Yes.
They're like technically passive.
They are passive.
Okay. Because one thing I know for sure, even with me, my real estate journey, is that in the beginning, I was afraid of the big multifamily units. I don't know why. Like, I think it's because of the gurus online. All they talk about is single family or small multifamily unit. Somebody that haven't done deals at all. They're interested in real estate. They've never done it, but they're too, I guess, afraid or scared of these big units. Can you explain, like, how did you pass that fear of, obviously you started with wholesaling, but, you know, put yourself in the shoes of somebody who has never done it at all. Like, what is, because I've learned that going bigger is actually better.
Yeah.
There's less risk going bigger than doing these small deals with this fix and flips, for example, that we do. Going now into new development, I found that, you know what, with the same energy, same time I was spending in flipping small properties, when we go in and build big luxury homes, it's the same risk. We just have more profits so that you have also more margins of error as well.
Yeah.
Right? So how does somebody pass the fear of, oh, this is too big? How do you pass that fear as a newbie?
Yeah. So I too felt that as well. And shout out to actually Leslie from XI Capital. When I first started off and I wanted to get into multifamily on the operating side, I too wanted to start off with something that I was familiar with. I was like, okay, you know, maybe we should start off with like 20 units, 30 units, you know, let's take it small, easy step in. And then he told me, he was like, hey, why not just go bigger? And I was like, well, it seems scary to me, but he said it's literally the same amount of work. The only difference is the numbers are bigger.
It's so true.
It's the same amount of work. And interestingly enough, because we don't self-manage, so we're using third-party property management companies. Okay. And when I started interviewing all of these property management companies, a lot of them don't even want to deal with anything less than 100 units.
Yeah. They won't even consider you as a client.
No, because they want on-site employees. And if it's anything under than 100 units, it's not really worth it. So I found out that the property management companies that are actually like really good won't even give you the time of day. So now you have to self-manage, and property management is a whole different business in itself. So because of that, I was like, you know, let me just go for it. And here I am.
Got it. Okay. So what is some of the biggest misconceptions about halal investing in real estate?
The biggest misconceptions? I think I would say it's when people hear of real estate, it's immediately, unless you're paying cash for the property, you immediately think interest. It's really difficult to get away from interest and mortgages in the US. But that is why I moved away from wanting to be an operator and purely focusing on the raising capital piece and just partnering with operators that already have thousands and thousands of units, and we're coming in and we're just raising the capital. So I'm not on the loan. I'm not involved. We're investing in their business.
Right. So you raise the private capital.
Yes.
The capital goes into the building. You make a fee on the entry and exit?
Yes.
Got it. So explain what is an operator means. Is the person that is handling management and they own the building, and like what does the operator mean in multifamily?
Yeah, an operator is someone who's handling the asset management, who is managing the whole business. Okay.
So with that being said, like how do you select the kind of building that you target or the markets? And for those of you that don't know, we're talking about the US market here. I know the Muslim community is big in the UK, but the UK market is very different than the US.
Yeah.
I see that a lot in our Muslim community. People start comparing. I even see that with a lot of Africans. They go, between Ivory Coast, and you cannot compare. This is the US market. The US market is different than the Dubai market. If you analyzing the Dubai market, you focus on the Dubai financial system, how the banking system over there work. Do you know of any halal banks in the US?
A few, not from the top of my head. But
Okay.
yeah, a few, yeah.
Yeah, I've known a few, but I don't know. It's just weird the way they structure the things.
Yeah.
But how do you select your properties? Like, how do you pick markets? Like, what are the
Yeah, so we target the Sun Belt region.
what is that? Mean?
And the Sun Belt region means, places like Texas, Georgia, just like the...
So where the sun is like,
Yes.
I got it.
Yes.
got it.
Red states.
Red states. Exactly, guys.
Because
Red
they're,
states.
They're more tenant friendly. So,
Tenant or landlord?
sorry, landlord friendly. So yeah, those are the
Actually,
types of...
business friendly in general, right? You would say? For
I would
business-
say in general.
yeah.
Yeah, in general, yeah. I would
And
say
I
that.
know it, guys, because I'm foreclosing on some people on some of my properties in blue states right now.
Mm-hmm.
It's a nightmare. You cannot get a tenant out. You cannot foreclose on somebody.
Yeah.
It's so tough. It's like you don't own your home, basically. So like if you own a property in, I don't know, Maryland, New Jersey, New York, if the tenants stop paying, how long it takes to evict them? A year or two.
Yeah, it takes forever.
So that's what we mean by blue or red states. So here in the U.S., you want to focus on red states. Texas has been my favorite.
Yes, Texas is great. That's where we're headed next.
Okay, so you focus on the red state.
Yep,
and
but we're
what else?
focusing on red states, and we're focusing on B and A class assets, which basically means they're nicer neighborhoods. A class asset is basically almost a new build. It can either be a new build or it's been built in the last 10 to 15 years. And then B class is a little bit lower than that. So we are focusing on, because what we want to look for is the tenant class. What's the medium household income of those tenants?
Okay.
Because the better tenants that you have, the less problems the building will have. So yeah, B and A, and what we are doing, which is the biggest piece, is value add, which means we want to come in and there has to be an opportunity to add value, whether that is increasing rents, renovating, increasing rents, decreasing expenses. We don't want to buy a building that was just built, like let's just say it was built a year ago and it's done, it's good, it's great.
Yeah, there's nothing for you to add.
There's nothing for us to add, which there's nothing wrong with that. That's definitely, it's just a different type of asset. I'm not there yet, but inshallah, I will be.
Yeah, you have, I mean, every investor have their strategies.
Yeah.
Some investors like it turnkey. They don't want to deal with none of the, coming in. And now the thing is very important. You said a key word there. You said value add.
Yes.
Multifamily is valued based on what?
The value is based on the NOI, which means the net operating income, which basically means how much is the building making, just to simplify it.
So the rental income.
Yes.
Right. So if you buy 100 unit and you can come in and raise the rent per unit, even if it's $50,
Yeah.
that adds a lot
A lot.
to the overall value of the building, correct?
Yes.
Okay, got
And
it.
that's also the beauty of having larger assets because that $50, it adds up.
Yeah, just do 50 times 100 units and see what that gives you,
Yeah.
right? So the value goes exponentially up. The average return for a Muslim investor within the kind of fund you have is what? First, what is the minimum investment? Because I'm assuming you have to be an accredited investor.
Yes. So
invest, right?
our minimum investment, $75K, is the minimum.
$75,000.
Yes. And you don't have to just be liquid. It doesn't have to be $75K from your account that you have saved. You can use your 401K. You can use a self-directed IRA. You can use your pension plan. You can get creative with how you can pull that money out.
Yeah, absolutely. So what is an accredited investor?
So accredited investor is an investor that makes either $200,000 or has $1 million net worth, including their household income, and they're married as well. So as
That's if you're a U.S.
Yeah, this is all U.S. guys.
U.S. citizen.
Yes.
Do you have to have your U.S. citizenship, or can you, as long as you have a social security and a permit, you can invest?
Yeah, that's
Okay, got it. But as long as you're paying taxes in the U.S., let me put it that way.
Yes, I mean, I think too, if you're making $200K a year, sure, you probably have. No, your citizenship.
So here's the deal. Here's my experience with dealing with our community, right? I know a lot of business owners in the U.S. from our Muslim community, fundamental mistake they do is they don't declare nothing on their tax returns.
Okay.
So when they go in and try to invest in something like this, now they don't have anything to show for on their tax returns.
Yeah.
So you kind of like hurt them. So it's not necessarily about, some just don't.
Yeah.
I know a lot of business owners like that investing with us now. We had to go back with a qualified CPA and fix their tax returns in order for them to be able to invest.
Okay, gotcha. Oh, learn something new. I didn't know that.
Yeah. So with that being said, is there any people that live overseas? Somebody's in Dubai, somebody's in, I don't know, Muslim world in Africa. They want to invest. Can they?
Yeah, they can.
Okay.
Yeah.
Okay. I'm assuming there's a legal process because I've done that as
There's
well.
a legal process that the attorney handles. I can't even get into it because I'm not that.
All right, guys. Where you from Somalia, right?
I'm from Somalia.
So, guys, if you're a multimillionaire in Somalia and you want to get the green card in the U.S. through investing, well, you can just reach out to her. She'll help you with that. Okay. So the return depends obviously on how much you put in.
It depends on how much you put in, and it's also deal by deal cases. So it really just will kind of like depend on the deal, because one deal might make a lot more money. This other deal might make a little bit less money. So it kind of just like depends. We also sometimes will do something called the waterfall structure, which might be a little too complicated to explain right now, but it's basically where you have there's a different classes with the investors. So there's like A, B, and C. And depending on what the investor wants. So for example, some people want more upfront cash flow. That's more important to them. And when we sell the building, they care less about the profit share in the end. Some don't care as much about the distributions and the cash flow up front, but they want that bigger chunk at the end. So basically, it just kind of really depends on deal by deal. But what we do is when we do get a deal, we create an investor deck, and that breaks down everything. How much you're getting, it just depending on how much they put in, what they'll get out. It breaks everything down. So there is no room for guessing.
I mean, like in anything, guys, it really comes down to like what's your vision as a person, I would say. So even you as a private lender, typically when you're trying to invest, the first question is always, what are you trying to accomplish? Are you a short-term, long-term? Are you more interested in cash flow? So if you don't know your vision, I guess the first step is let's clarify what your vision is and what you're trying to accomplish, then structure based on that and also based on the deal, obviously.
That's one of the main questions I ask when I'm talking to new investors is, hey, because yes, real estate does have, especially multifamily, has a lot lower risk than other investing strategies. But the number one question that I ask is like, hey, if something crazy happens and your money has to be tied up for a while, like, is your life going to be ruined? And if the answer is yes, I don't want your money.
Exactly. Thank you. I call that the desperate lender. I see that a lot in the single family space. So there is people like, let's say you only have $25,000 saved in your bank account, or even 75, but that's all your life savings. That's all you have. You're a desperate lender. If you lend that money, that's not disposable cash. That's not an excess cash you have after, your living expenses and emergency fund that you need. If you need that $75,000 to pay your light bill, you are a desperate lender and you shouldn't lend anyway. I mean, an accredited investor typically they have, because for you to be accredited, you must have.
But some people don't manage their money well, right? So you can be a high earner.
Most people don't.
Yeah, you could be a high earner, but you don't really have a lot of money saved. So that's like it's really important to me, because my purpose is to give value to the investors and, have them have a way to make money passively while they focus on their business and they focus on not their business, their work, and focus on their family. So if lending me $100K, for example, is going to cause you a lot of anxiety, it's okay,
or cause you a lot of anxiety. I've had situations where I should have trusted my gut instincts about some private passive investors. They want to lend, but I can tell that this person will be a headache based on their mindset. That's one. Secondly, the expectation. Third is like you said, even though they have the money, I can tell they're financially responsible. They've been my most. You cannot sleep at night. They feel like they own you. They start stressing. One of them, what happened to me? He went and gambled. So he invested with us, but then the remaining money that he had, he went and gambled it away and lost everything. So now he was hammering our phone to get paid, get out, because he needs the excess cash. So definitely, guys, you have to have the right mindset. That's number one. Number two, you obviously have to be one in some way, shape, or form to be in real estate, obviously. Right? The other thing is, what is the average amount of time when it comes to the length that the person have to be comfortable for getting their money? If they invest?
So for this, it would be about 3 to 5 years.
Okay, about 3 to 5 years.
3 to 5
But
years.
they might get like monthly, depending.
They are. They get that from day one.
Okay, so every month you're getting a check.
Either monthly or quarterly.
Okay.
Each deal will differ, but you are monthly. Day when you're getting a check.
Okay. On the multifamily side, 100 units and up, what is the average amount of time? I mean, exit time length. Typically, people want to exit and sell the
3 to 5 years.
3 to 5 years, right?
Yep.
So the ones that are more interested in like the back end profit share, is at the exit they get a windfall of cash.
Yeah.
From the and that's also a percentage. The percentage they get from that is based on their investment.
Yeah, and they're still getting cash flow too. They're just getting less because they want that bigger chunk at the end.
Okay, so that's very specific to what you want, what you're trying to accomplish.
Exactly. Yep.
Okay.
So I ask, what do you want to do?
Do you want more cash flow or you want more equity in the back end?
Yes, exactly.
If you're me, you should take the equity all day long.
Yeah, I agree.
Yeah, that's where the money is. But okay, so with that being said, do you mind giving like first thing, have you found it more challenging? Because I've done both. More challenging to raise private capital with the Muslim community or the non-Muslim community? Have you ever raised capital from the non-Muslim community?
Yeah, I mean, a lot of my investors are not Muslim because it doesn't matter, guys, if you're Muslim or not. As long as if you want equity and you want interest-free, equity-based returns, talk to your girl. Come holler at me.
So guys, anybody can invest. You don't have to be Muslim.
Yeah, you don't have to be.
The reason we're bringing up the Muslim factor is because, there is a lot of Muslims in the Muslim community interested in real estate.
Yeah.
They just stay in the fence because nobody's offering them that equity. Most people are only offering the interest.
Yeah, exactly.
Type of offer. So that's the reason why. So we know there's a lot of interest, but it doesn't matter what faith you are or you don't have faith at all, even though we all have a faith in something. Well, you can invest as long as you want to be an equity partner.
Yes.
You don't just want to be an interest lender because there's some people that's all they want to do.
Yeah.
You just want to be the bank.
Yeah, exactly. Right? So, but to answer your
question.
What
is the pros and cons, by the way?
Well, with
being an equity partner or just lending your money as the bank?
Well, so on our side or on the investor side?
In general. Like if you lend in just interest only based or you're an equity partner.
So if you do interest only, it's so expensive.
Okay.
Like it's on our end, it's very expensive to, what are people right now, the investors that I know, they're giving 13%, 14%, 15%, some even 20%, 25% is annualized. So it's very expensive on our end as the business owner if you're going to give that up. And also too, there is no protection for you because the great thing about the equity partner is they are a partner with you. So they're in it with you through the ups and downs.
Yeah.
And interest only, which we call it a debt investor. A debt investor, they're not in it.
Yeah, they don't care. They don't have invested interest for you to succeed, basically.
They don't care. Yeah. Like once their time frame is up and let's just say you guys have like a 9-month term or 1-year term, they're like, where's my money? If your building burned down or whatever happened, they don't care.
They don't care.
So that's the thing.
Yeah. They might come for your children's milk, your primary residence, all of that.
Yeah.
So the equity, I agree. When you structure equity, people have more vested interest. They want to see you succeed because they also own it with you, but also you're helping them build wealth and they don't have to find the building. They don't have to manage it. They don't have to learn how to negotiate, structure the deals. Most people don't understand the work that actually goes into structuring deals.
Yeah. That's why I switched to, initially, that's what I wanted to do it all. I was like, let me find a deal. The brokers would not take me seriously because I didn't have anything. I didn't have any units. That's why I moved here, actually. This one broker said, you seem like a passionate young lady, but your passions won't pay my commissions. That's what he said to me.
That is a fact, though.
I mean, he's not lying.
Yeah, he's not lying. Your passion is not gonna. Brokers, for us, we deal a lot with because I have a similar journey, except I don't do the big multifamily stuff.
Yeah,
I've moved away from it because as soon as I understood this is all about private capital raising, I'm like, okay, I'm already good at that, but I'm really interested. I don't know the new development, especially after reading The Art of the Deal. I don't know, that became just like I just fell in love with it. So that's all we're doing now. Any multifamily we're gonna build it ourselves, but I'm not about to build 100 units. Not for now. Maybe when I'm 60, 70. But we're gonna stick to the
70.
Yeah, like I'm talking about building 100 unit.
Yeah, years
old. Listen.
Mamadou, you got that in you in a year.
No, I'm talking about building. If I'm gonna buy 100 unit, I'm gonna buy an existing one. As a developer, building a big unit and building a small unit is a different ballgame.
Develop it, I'll raise the money. What's the problem?
No. There's a difference because you can operate as the developer or just as the person raising the capital.
Yeah.
But if you are the developer on that building, it's
a lot
your chances of losing money is. I'm talking about the big ones. So now we just stick into like luxury specs build. That's like single family to sell for profits, and then small multifamily to offset the taxes, obviously.
Okay.
So that small multifamily, we do the same thing. We do an equity structure.
Okay.
Now we're not interested in the interest-based loans at all. I've dealt with it enough when I was doing the flips and the buy and holds. It's just not worth it. It's just the headache is not worth it. Plus, anyway, with our faith, it's just not worth it. Okay. So what have been the challenges you've been facing? That's number one. Number two, do you see a lot of women in this space?
I I do. And are we talking about real estate or are we talking about multifamily?
All of it. I mean, it's all real estate.
Real estate in general is a male-dominated field.
Okay.
Now, as you start to get into kind of the multifamily and development, the numbers dwindle down even smaller. Even in Muslim, I haven't met a Muslim woman yet. I would love, if you're a Muslim woman in multifamily, in real estate in general.
Interesting.
I want to be your best friend.
Yeah, interesting. That is true. Okay.
So yeah, I haven't found any Muslims yet, but on the realtor side, of course, it's a lot of women. Yeah.
Okay. What have been the challenges you faced so far within your journey? Like, what have been the most challenging?
So when I first started off with wholesaling, it was pretty easy for me.
Okay.
And I didn't realize that it was easy for me until I got into multifamily. Oh, yeah? And it really, because I attach my worth to my achievements, which is something I've been working on. Okay. So it really made me feel some way because I'm like, why isn't this working for me? It took me about 1.5 years to finally lock something in. And it was because I did it wrong. So in hindsight, now I know I was trying to do it all.
So 1.5 years to get your first multifamily deal.
Yeah, it took me, and that might not even seem like a long time, but to me,
it's not.
It felt like a very long time because I started off with wholesaling. I had no business skills and no sales skills, nothing. I got my first deal in a month. I was able to quit my job within 5 months.
So you've been spoiled.
I was.
Yeah,
I didn't know at the time.
It's to a detriment. Yeah.
So I was like, I got this. This is going to be 100-unit building. I'm going to do that I got that in 60 days. I got it. Wrong.
Yeah.
So my challenges were I was trying to do it all. The biggest mistake I made, I would say, is dissolving my wholesale company. I shouldn't have done that.
Dissolving it?
I dissolved it, yeah. I should have kept it while I tried to buy it.
Of course.
Because what happened was I completely just dissolved the whole company and then started just living off of my savings. And then with multifamily space, there was 2 times where I got close, but it's so much like inspections, everything costs so much money to even get into. So I was just, and then if you don't close, you lose it.
You lose it, yep.
We had about 30 employees at the time.
So you were bringing money with your VA company and plus the wholesaling.
Yeah, and then
you completely shut it down because you decided to transition into multifamily.
Yeah, because one day I was in Brazil and I was thinking, and it was just me, and I was like, what am I doing? Why am I not building any long-term wealth? I had a great cash cow.
Oh, got it.
But I was not focusing on.
So you've never kept not even a single family while you were wholesaling?
No.
Oh, I see now. Okay.
Yeah.
So your epiphany was, man, I'm not keeping anything. It's cute to bring all this cash.
Yeah.
Man, your taxes must have been crazy.
That's another thing. It was insane.
Yeah. Uncle Sam took all that money to take it to.
He did.
Kill some Palestinian children. It's a conversation for another day. Actually, I love the fact that you brought that up, because a lot of people make this mistake. Is one, whether you're getting into multifamily through wholesaling, or you're getting into single family through wholesaling, or you're trying to straight invest in because you have a great 9-to-5 or you already have income, most people quit what they have too quick. I've seen that a lot where people go, oh, I'm going to go into real estate and I'm going to quit my job today. They haven't even closed the deal yet. They don't know the amount of time it takes, the amount of energy, and then how many posts recently, part of a private group that I'm in, I've seen at least dozens and dozens of posts, people regretting that they left their 9-to-5 because it's been 8-9 months. They haven't closed any deal and they found out, oh shit, I actually got to do some work. This is work, right? To find these deals and stuff. And they're like, now I want to go back to my 9-to-5. I was an engineer, but they won't take me back. Of course. So guys, don't leave your job. If you already have something bringing income, we all have bills, especially if you live here in the US. You have bills to pay. So you can do this part-time while still keep your 9-to-5 or whatever business you have that is bringing that active income, because you're going to need that anyway.
Yeah, you're going to need it.
Yeah, you're going to need it, especially if you have a 9-to-5. Sometimes you need the credit, you need it's actually an asset to you, not a. So before, what is that monkey analogy? The monkey doesn't jump to another branch before it doesn't leave the branch it's holding on before it catches another branch, I think.
Oh, I never heard of that.
There's an analogy, the monkey jumped from tree to tree, right?
Yeah.
So the analogy is basically a monkey typically when he's jumping from a tree to a tree, it doesn't let this tree go before it catches the other one.
Yeah.
So it's like the same thing in entrepreneurship. Don't be too quick listening to gurus online and quit your job too fast, because this is not an easy thing.
Don't please.
Yeah, you might end up giving up.
Please don't. And then it also costs money to run your business as well. So if you quit, it just doesn't make sense.
Yeah.
The only reason why I did it is because I was like, I got this. I did it again. I was wrong.
And that's another thing you said that is so key. I spent 8 months before I ever got my first wholesale deal. If I have to go back, I am so grateful it wouldn't change anything. I wish it would have taken me even a year. Because all of the things that I've learned through that 8 months of struggle is I've built thick skin. I've learned that, okay, you got to be resilient. You cannot give up. And this is not easy. It's simple, but it's not easy.
Yeah.
But I started my journey with, it was 2 or 3 young people with me. We all went to the same workshop the first time. We were all new. We didn't know what we were doing. But 2 of them got really lucky that first month they got their first deal. And I can tell you right now, they're out of the game because they got spoiled.
Yeah.
So they closed that first deal. Then 6 months later, no more deals.
Yep.
Because, this is too easy. So they didn't like craft and worked on their sales skills and marketing and stuff. So getting your first deal actually is to your detriment. You do want to learn. Now, if you're a passive investor, that's different. Because if I have 500,000 right now,
that's different.
I just want to get into a deal. But even then, you definitely don't want to quit your job as soon as you invest in the first deal. Because, your money will be working for the next 3 to 5 years.
Exactly.
So you may want to do a couple of deals before you, One thing I want you to explain to me that I never understood, right? With the multifamily, why is it worth it if people, the big units I'm talking about, 100 units and up, if people always exit within 3 to 5 years, you have to sell it?
Why is it worth it?
Yeah, because how are you building long-term wealth if you exit in every 3 to 5 years?
So not everyone does the 3 to 5 years. So this is what I was talking about, value add, right? Okay. Typically, if you're coming in to do a value add, you want to come in, increase the value of the property. You want to increase the value of the property, right? Okay. And what you want to do basically is create more built-in equity. So you want to sell so you can
get the
take
windfall of
that.
cash.
Exactly.
Okay.
And typically you want to take that amount of money and then rolling into another deal. Now, this is what I was talking about, A-class assets, which is what I want to do, soon as well, is when you do get something like an A-class, you could just hold it.
What is an A-class?
A-class are buildings that don't need value add. They are good to go. Everything is pretty much...
Okay, they're fully renovated, fully turnkey, guys. Probably in the best neighborhoods as well.
Exactly.
Best kind of tenants.
Exactly. Now that you could sit on for 10 years and just wait in. And
that's just a different strategy.
It's just a different strategy, I think the best thing to do is have a combination of both, really. Yeah. So, and another thing too is we want to get the money out for the investor as well. And the easiest way to do that is by selling, because now you get an influx of cash. And now they get back their principal, and now they've been getting either 3 years or 4 years or 5 years of cash flow that they've been getting, the distributions. Okay. So it's adding up. So
let me ask you, with even the buildings where you're doing the value add, well, by the way, would you call those like B class?
Any value add can be D class. D
okay.
class, C, B, A.
Okay. It could be any.
Yes.
Okay. Now, with that one, for example, let's say just a hypothetical scenario. If I invest in a value add building, and I'm talking about you as the equity fund, right? You raise the money, whatever, you guys do it. On the exit, 3 to 5 years, is there no options to do like an exit, no exit type of strategy where you just do a refi and still keep the building? People don't do that?
Some people do that, yeah.
Okay, it's not an interesting...
Typically, they're refining at like year 3. That's why I said that 5. Typically, they're refining at year 3, year 4, and then they'll probably sell at year 5, or maybe they might sell at year 6. Okay. So there was this deal, and I was looking at actually a few days ago. They bought it in 2017. It was an institutional buyer. Okay. They bought it for $15 million. Okay. Guess how much?
15 million.
15. Okay. Guess how much they're selling it for now?
35 million.
$42 million.
Holy moly, you guys. They bought it. So they bought the building for 15 million
in 2017.
2017. Yep. Did a value add.
Yep.
And now they're selling it. How many years is that?
2017. What is that? 6 years?
6 years.
That's 6 years? Yeah, 6 years.
That is insane.
And that's the benefit of selling.
Yeah, that is insane. I mean, yeah.
Because you won't get that, because now they've paid down their debt. They've been making all this cash flow for all these years. Yeah. And then now they get a big paycheck.
And guys, you're not making that kind of money in the single family space and small deals. Guarantee. I'm telling you, right now she's talking, you guys think this is big deals. They're not even big.
No.
Like 100 unit, 200 unit, don't be afraid of the big deals, because the bigger you go, the more money you make. And it's the same exact, this is I cannot stress this enough, because I hate when I listen to these single family gurus, because it's a single family guru that talked me out of multifamily.
Really?
Yeah, I want to punch a single family guru in the face.
Why? Wait, what was his reason? Or she?
It's like, oh, it's too complicated. Stay away from it. Most people are not making money in it. It's like, they put this like mental fear on you, when in the back end they're doing it. It's just to sell you that single family mentorship ticket. I've seen it over and over. So typically most people, again, guys, I think one of the things that she said here, and I want to recap this. If you want to get started right now and you don't have the capital, whether you're a Muslim or you're not a Muslim, it doesn't matter. If you don't have the capital, you can start in this space through just wholesaling.
Yes.
So you can learn how to go acquire, like basically you're going to have to learn how to communicate on the phone.
Yeah.
Talk to these brokers, put deals together. So you're going to have marketing and sales skills.
Yes.
And then once you have them under contract, you can find somebody like her and assign your agreement, or you can help them assign it. And you can make 50,000, 100,000, 75,000 just by selling the contract.
Yeah.
That's the best way to start. Number two, don't listen to anybody here in the US that tells you credit doesn't matter. I'm sorry, guys, get your credit right, because it does matter. To get you into this, at some point in time, you're going to need it. Okay. It costs less than a Starbucks to fix your credit.
Yeah.
Get your damn credit right if you live in the US. Okay. So with that being said, I wanted to transition into something else. Like right now you're doing the value add. You think how long is going to take you to transition into the, A class?
I think I could do it next year.
Next year?
Yeah.
What's your goal to raise this year?
Now, this year...
You've already raised 8 million or more.
I have so far 8 right now.
Okay.
So I actually have I was looking at my KPIs. I actually have 68 million total
in your
that I could, but I have to convert the investors.
Of course.
So
what's the KPI?
You said what?
What is the KPI?
Key performance
indicators.
Key performance indicator. I love some KPIs.
Guys, that tells you how organized she is, and she's data driven. You're probably data driven.
I am.
Are you data driven?
I am. Yeah. I mean,
you're a numbers person.
How do you know what's working if you don't see it?
Yeah. Something I actually didn't ask you from the beginning. Does somebody have to have like a fancy degree to get into this? Like
no. Okay,
you look like you have a fancy degree.
I don't have. Okay, wait. No? Hold on. Let me answer your question first. I don't have a fancy degree, actually. I'm a dropout.
I'm a dropout too, guys. Don't feel bad about yourself.
So, no, you don't have to. It doesn't. You know what's funny is I went to school for all those years and it meant to nothing. I'm not even doing what I went to school.
Can you learn this in school?
No, not really. No.
Guys, that's a hard no.
No.
It's not. Don't even hesitate.
No.
The other day, somebody was asking me if one of my students, if he should go to university to learn real estate development.
Oh, no.
But you ain't learning nothing there. Like, you want to learn real estate development, either go work on the field if you're trying to be the construction guy.
Yeah.
Or the developer is truly the person that actually almost never goes to the site. If you guys never read, and I'm sorry if you hate Trump, by the way, guys, I don't like him necessarily. It's not about Trump or not Trump. But The Art of the Deal, his book, is like one of the best real estate books I've ever read. I don't know if have you ever read it?
I haven't read it.
You have to read this book. If you in real estate, you have to read that book. It's all about real estate.
Oh, okay.
But,
really?
But his art of putting deals together, it is insane. This book kept me up at night, like legit.
Okay.
So the negotiation skills, how do you put is insane. Anyway, it even goes on how you manage the buildings and how, oh my gosh, bro. Just talking about
he goes into all of that?
All of it.
Cool,
There's nothing that he leaves out. So when you're reading this book, one of the things that the reason people put it down is because in the beginning, he talks about his day. He literally gives you his day when he's on the phone, blah, blah. So a couple of pages is like about him being on the phone, and it's the conversations. So people get bored with that and they put it away. Once you pass that, the juicy stuff comes in. Yeah. Like if you're in real estate, multifamily development, no development, raising money, you got to read this book, The Art of the Deal. I'll actually put a link down below. Okay. So
yeah, I want to raise 80 million this year, inshallah.
80 million.
Yep, that's what I'm going to go for.
8 and 0.
Yeah.
80 million.
Why not? Let me go for it. So once I do, because right now it's not really a matter of when should I go after A.
Okay.
It's really because what I'm doing is just partnering with operators who have so much experience that are, so I can just go network with someone who is already doing that.
How are you finding the operators that you partner with? Networking events.
And I mean, and the operators that
as a Muslim woman, don't be shy to go out.
Oh no, they don't care.
Okay.
They don't care. They're very friendly.
No, it's not them. It's more for the person that should get out of their.
Oh yeah.
You know,
I mean, you can't even be in the space and
comfort zone
and be shy and timid and not want to talk to people.
That is a fact.
It's
unless you already have the money and you invest in the money.
Yeah.
Then you can be shy all you want.
Then yes, exactly. But
you can meet her in closed doors and give her the money.
But yeah, so networking events, and then because I like to go after operators who like have like thousands of units.
Okay.
Because I want to position my investors and put them with operators that have a lot of experience.
Got it.
Yeah.
How about the deals? How do you find the deals? I mean, don't find the deals. They find the deals. Mm-hmm. Okay. So there you go. So it's a couple of different ways you can skin the cat.
Yes.
And I want you to make clear this to the people. So you can either get into multifamily by just focusing on being the one that raised the capital. Guys, you guys will be surprised. When I got into real estate new development, it is the same thing. These big developers, most of them reach out to us because they know we know how to raise capital.
Yeah.
And they want us to be their capital raiser. They don't know how to find the capital. They have all these deals. They have you guys would be surprised. 90% of people, or probably even over, don't know how to raise capital.
Yeah, they don't.
It is the number one and best skills you can have. If you can find money, everything else will come and find you.
Yes.
Or if you already have the money. You guys, if you never watch Shark Tank or whatever, like the people with the money, they just want to put their money to work.
Yeah.
Right? So if you know how to find those people and raise the money, people will bring you deals and you can get in, get equity, get whatever terms you want.
Whatever you want, yep.
So that's the first way to get in, is learn how to raise private capital. Day one, you don't have to have any experience. You can learn this. Correct?
Yes.
Can somebody? Okay. The other way is you be the one who's the operator, and then you reach out to people that raise capital like you for your deals.
Or you can try to raise capital yourself. But yeah.
Okay. But the best way to do it, guys, is just,
yeah.
Most people that I've networked with that are actual operators, they struggle doing both.
Because that's why it took me so long.
It's two different business models.
Two completely different business models. And earlier when you said you're so glad that it took you 8 months to get your first wholesale deal, I'm so happy it took me this long to find a multifamily deal, because I realized, why am I trying to do it all? Because people would, commit and say, oh yes, all right, I'll give you a few $100,000.
Yeah.
Why? I don't even have any units.
Yeah.
I was confused why they were so willing to just give me money. So that whole process taught me, okay, this is your calling. This is the part that you're good at.
Okay.
Focus on just this.
Okay. So what would you say helps somebody build trust with people that have money? Is it an online presence? Like what is, because I'm sure, you've ran into situations where they go, okay, where are you? Where can I find you? Who are you? Like, talk to me.
So the biggest way to build the trust is, I would say number one is because you said this earlier, I believe, a lot of people wait until they find a deal and they get a deal under contract to raise money.
Yeah.
That's the biggest mistake ever.
Yeah.
Because now investors feel when you're desperate. They can sense it.
Yep.
So now you are going to position yourself to take terms that make no sense, that you shouldn't pay back.
Because you're desperate.
Because you're desperate, right? And investors see that and they're like, oh, well, give me 25%, give me 30%, give me 50%, whatever they say, right? 100%. And you're going to give it to them because you have a due diligence period that's going to end and you have to close this deal. So the way to avoid all of that, because there's way less pressure, is to just start building those connections now, start talking to investors. Educating them is the biggest way to build trust. Educating them, letting them know like, hey, like I'm here to help you build generational wealth passively, and I'm here to serve you, and I'm here to give you value. And I teach them. I do not shy away from the risks. I tell them before they even ask me, I tell them.
Full disclosures. That will help you build trust. Tremendously.
Like just be honest about it, be forthcoming about it, don't pressure anyone, give them time, and people are watching, even if you don't know they are. Yeah. I actually had an investor who committed 1.2 million and never even like officially, he was in my CRM for like 9 months and never said a peep. And then bam, like, hey,
all of a sudden
I got some money that came in.
Yeah, they're watching. You don't know how they're, you don't know where they're watching. That's why you got to have, nowadays, you cannot live under a rock, guys. You got to have an online presence.
You do, yeah. I will call myself out, and I actually had an investor, which was funny because she was an older woman. She was like in her 60s. So I was surprised to hear this from her. She was just like, hey, I loved everything. It was great. But I searched you online, and aside from your website,
can't find you.
She said, where are you?
Yeah. People want to deal with people.
Yeah.
Especially nowadays, we're in this AI era.
Yeah.
More than ever, people want that human connection. And you just said something key about educating your investors, disclosing everything, all the risk. Most people don't know, but typically when somebody invests in you, there's two factors that they consider. The number one is you, the person. If they feel good about you as a person, the way you talk to them, they kind of trust the vibe that you give them, the energy. And the more you disclose, and I found this I learned this through like when I negotiate with homeowners, the more you disclose the risk, the more they trust you. The more you disclose the downside, the more they trust you. Because the upside, most people know.
Yeah.
Is the downside they want to know. What is the worst case scenarios, whatever. And if you disclose it and they all know and they make basically an educated decision instead of trying to hide it and be too salesy, now do you have that human connection? Then the second step, they go, okay, you know what? I like Shariah. I like Mamadou. Second step is tell me about the deal. But if they don't like you or they can sense you're desperate, nobody like to lend to a desperate person, including you, by the way. If you have money, you wouldn't lend to somebody if you knew they were desperate.
Yeah, exactly.
And that is the reason why actually in the multifamily space, did you find that most investors want you to have some skin in the game before they even invest a percentage of the...
Only savvy investors.
Yeah. What is a savvy investor?
A savvy investor is an investor who is already, it could be two things. It can be just an investor that also does real estate, like actually actively does real estate, or an investor that has been, honestly, just an investor that's actively doing real estate.
Yeah, like basically they know they're in the game. They're in the real estate game.
They're in the game, then they want it. But passive investors, they don't care.
They don't care. Yeah.
They don't care.
A passive investor is somebody who, like, let's say a doctor, lawyer, whatever, or a business owner, but 100% of their money don't come from real estate. It comes from somewhere else, and they're just leveraging real estate for maybe from tax benefits or just want to build wealth. It really doesn't matter. But this is just me on a personal preference basis, knowing everything that I know now. When I'm doing a deal, I want at least 5 to 10% of my own money to be in it.
Yeah.
Because if I convince somebody to give me their money and I believe in this project so much, let me also put my skin in it. Then I have more vested interest
for sure.
to make it work. So, but you can skin the cat multiple ways. But guys, never go into. And by the way, even if you walk into Bank of America right now or Chase, if they sense the slightest desperation in your tonality, you're done. They're not giving you money. Everybody likes somebody who got their shit together. So it doesn't matter if you have $0 in your bank account. Raise the money before you need it.
Yes,
is a golden rule.
It will save you so much. So much headache. It will save you so much.
Yeah, and I'm gonna let you tell them this, but would you say it's better to be on the private money raiser side, or is it better to be on the operator side in the multifamily space?
Honestly, it's whatever you're good at.
Whatever you're good at? What is the money? Like,
I mean, the money is, you can...
Both?
Yeah, for sure. You can make...
I think there's more money in being the money raiser than the operator.
Not necessarily. No, not necessarily. I think you should hone in on whatever skill you're better at.
Got it.
And then, because once you scale, the money equals out. So it doesn't even matter. And guys, if you're getting into multifamily development to get rich quick, get out of it.
Yeah,
anyway.
forget it.
So
that's in anything, by the way.
That's in anything.
That's in anything. If you never read the book, The Richest Man in Babylon, you should read it. One of the best quotes that I have there is that this number one secret of building wealth is not to want wealth too quickly. Delayed gratification. I see this all over the place, especially one of these industries now. There's lenders that call themselves with animal names. They're, I have an elephant right in front of me here. They're elephant lenders. They're alligator lenders. Whatever they call themselves, and the kind of terms they give you are crazy. So they'll give you like $100,000, and then they want you to give them 250 within 90 days.
Yeah,
they call themselves animal names. You guys can recognize yourself. There is millions of them losing money left and right. Millions. Why? Because it's that gambling mentality.
Yeah.
Instead of wanting a stable, long-term stable return, people want like the quick. I want to invest in one multifamily deal and I want to get rich now.
Yeah.
Because I want my Rolls Royce, I want my Bentley, I want my Ferrari. Guys, that's in any industry you get in.
Yeah.
If you are a quick get rich scheme type of minded person, you might as well go to Vegas. Because guarantee you're going to lose the money. Guarantee you're going to take some stupid emotional decisions. And it just doesn't work. So forget it. Delayed gratification. This takes time. It takes dedication. You have to be dedicated to whatever strategy you choose. It is hard work.
It is.
It's not going to be easy. Nobody's going to hand it over to you just because you're cute or your name is... Nobody cares, right? So, okay. So with that being said, and anything else you want to add on this? Because give them tips. Like if somebody wanted to get started, they're absolute newbie, where should they even is it just networking events? That's where they should start. Do you have your own networking events?
No, I'm gonna start doing that though.
You should start doing that.
I'm gonna start doing that.
What year?
This year.
Guys, she said it. We're gonna hold her accountable this year. This is what, April?
This is April 2020.
April. So we still have
We have some time. We're gonna do it.
No, we don't have some time, but I'm just counting till this, guys, till December. If we don't see the first event, I'm gonna call her out online. She haven't done the event.
No, we're gonna.
And she also promised to put out more content to educate y'all how y'all can do this.
Yes, well, yes, we will.
2 commitments here. We're holding her all accountable. And if you're a Muslim woman out there investing in her, please reach out to her because I promise you, I've been looking myself. Like I'm part of these private groups where most guys, like the Christian, as you guys can see here, I have the Quran and I have the Bible. I've studied both. But most of my Christian friends, they have like Christian men friend groups where they like spend time and talk about faith. And I've been looking in the Muslim community. I just can't find anybody in my space right now. Everybody that I find are in the UK. They're UK based.
Wow,
so I want to create my own Muslim man club within the real estate space. UK is big. Like UK is almost like a Muslim country now. They might as well just have it's nothing but Muslims in UK.
Oh wow, that's awesome.
Don't you see all the controversy online? Like people complaining left and right. So many Muslims in UK.
No, I haven't seen that.
UK is owned by Muslims. I'm sorry, but it is what it is. Yeah, I mean, with that being said, guys, there is not much to add here. We can talk about this all day long, but I really love seeing a Muslim woman doing this. That's one. Secondly, again, guys, she don't discriminate. She works with all cultures, all backgrounds. She's from Somalia originally, so if you're from Somalia, also tap in. She does speak a little bit Arabic, or she's learning.
Yep, in Somali. Yep.
Okay, so if you're in Dubai or anywhere else, but you speak Arabic and a little bit of English, you can reach out to her. Just reach out to her, DM her. What's your Instagram? How can people find you?
Yeah, my Instagram is Shariah Farah, SIRAI, and then my last name FARAH. You can find me everywhere.
Got it.
Just my first and last name.
Would you say somebody must start with single family before they jump into this, or can somebody like from ground zero just go straight into big multifamily?
They can go straight into it. The biggest thing with multifamily is credibility.
What does that mean?
You need credibility because no one is going to just give you money. No one is going to, even like with these deals, in multifamily, you have to win deals. That's what they're called. Or you get awarded a deal.
But if I'm new, how do I have credibility if I'm new?
That's what I mean. So because you don't have credibility, you have to align yourself with people who do. So that's the easy
So you have to leverage somebody else's credibility.
Yes.
Guys, this is called the Who Not How.
Yes.
Okay, Who Not How. Get that book too. I'll add the links to my library in the description. But guys, in life, you always need, so like, for example, if I came to her right now, she looked wealthy, as you guys can tell, and I say, hey, give me $200,000, I'm going to build a home. One of our questions will be how many homes you've built.
Yeah.
Right? Even in the banks here in the US, when you walk in, that's the first thing they ask you. Investors are the same. If you guys watch Shark Tank. So if you have never built anything, then she wants to make sure you have at least a partner who has built something.
Yes.
So you might be the person that have her connection to get the money, but now she wants to make sure you're dealing with an operator. In the new development industry, we deal with the same thing.
Yeah.
When you go try to build, you can go from an absolute newbie, pinpoint the land, go get the funding, but the first thing they want to see is, are you going to do this with somebody who has already built? Because you've never built. So you need to leverage other people's. This is why networking is so key, guys.
Yeah.
And by the way, would you confirm that real estate is a team sport?
Absolutely.
I mean, any business actually, but real estate is...
Real estate specifically?
Yeah, is a team sport.
Yes. If you are one of those people who thinks that they can do it all,
good luck with that
you're
stuff.
gonna have to change that mindset.
Yeah. So
that used to be me.
Oh yeah?
Oh yeah. That used to be me for sure.
Yeah.
And then I read Who Not How, and then I was like,
that book is phenomenal, guys. You gotta read that book. Who Not How. You have to read that book. With that being said, you said they can find you on Instagram,
yes,
TikTok too, or just Instagram?
Yep, everywhere. Yep, you can find me Instagram, TikTok, Facebook, LinkedIn.
Do you have a YouTube channel where you're teaching this?
I will, inshallah.
Okay, she will soon, but you don't have it yet.
I'm actually about to post my first video next week. So.
Okay, I'll put her link down below. Anyway, you guys can go DM her on Instagram, guys. I really hope you enjoyed this, guys. Don't be afraid of these big deals. Take action. It's either you have the money or you don't. That's really the bottom line. So if you don't have the money, you have to learn how to go find these deals, put them together, and then somebody else can find the money or whatever. And if you already have the money, then you don't have to deal with the headaches of knowing how to find the deals. You can just reach out to somebody like her, and she will get you into these deals. It's either or. So if you broke, focus on honing in into your communication skills, sales skills, marketing skills. If you already have the money, focus on putting your money to work, and she can help you do both. Right?
Yes.
All right, guys. So you already know I'm your host, Mamadou Diallo, guys. It was a pleasure, guys. I'll see you guys on the next, obviously, episode. Make sure you like it, subscribe, hit that notification bell so you don't miss out when we put out new content to help you.